Hey everybody, it's Jane Johnston with the Briar Hill Group at Remax Camosun. I'm here with He Said, She Said, They Said, a real discussion on real estate in Victoria, and with my co-host.
Hi, it's everybody. It's Andrew Plank with Royal LePage. Great to be here as always. And we've also got with us today a special guest, repeat guest, star Jen Lowe. I'd like to introduce
Hi, Jen.
Good morning.
How's it going? How's it going in mortgage world?
Oh, it's going. It's the fall market now for sure. And there's definitely been some rate changes and impending rate changes coming up in the next week and a bit here too. So busy time.
What does that mean?
Yeah,
actually?
Yes. So the 5-year bond yields have changed, which then puts the pressure on the 5-year fixed rates. So we get lots of heads up emails from a number of different lenders that we work with saying that rates are on the rise, So then what we want to do is make sure all our clients that are looking for a fixed rate have a rate guarantee in place, and we put that in place for 120 days.
What about refinancing a mortgage?
Yes, we would be doing that. We would want to be securing the rate before the rate increases, or looking at lenders that haven't increased yet.
Okay. And the reason the bond rates, that's like Bank of Canada stuff, right?
No, the Bank of Canada stuff is with the variable rates.
Okay. And so who sets the bond rates?
The bond market.
Yes.
The bond market in general. Okay.
Yeah.
And the reason that the rates go up for the fixed rates is because, of course, if a lender was looking to lend money and they can just get a return on investment from the bond market that's higher than they could actually lend on, they're just going to lend that money. So as the bond markets go up, they're going to raise their rates.
Mortgage rates.
Yeah.
You got it.
Okay.
Yeah.
Good.
Yeah. And if you compare, I mean, I was looking at investing in a short-term GIC even at the bank.
Yes.
Those rates are like 0.1% right now for a cashable GIC. So completely not even worth it.
Right. Yeah. I mean, especially when you consider inflation, you're actually losing money.
Yeah. Yes.
Huh. So fixed or variable recommendation?
Variable.
Okay.
Definitely.
That's pretty much 99% of the time when you ask a mortgage broker, fixed or variable, because that's almost always the case.
Well, and what's interesting is I'd be curious to know if people ask their bank representative what the bank representative suggests.
Yeah.
I will do that because I'm about to refinance. We are about to refinance. So I just want to check everything out. Okay, so let's just look at the market, and then you can tell me you can tell us what's going on in terms of you and your clients' experiences right now in real estate world. Okay.
So we've got last month's stats to review.
Right.
So we'll catch everybody up on what happened in the last month. This is our monthly update.
Yeah, so just to be clear, it is October 4th, and we're doing the Victoria real estate market update up to September 30th. We have this week's stats to just go over. Perfect. Okay, so you want to do the first part?
You're talking to me?
I'm talking to you, buddy.
Okay, so in the last week, what are we doing here? Yeah,
4 days.
I'll start on the left here with the Victoria Real Estate Board, bottom left corner, 2021 net unconditional sales for the month of October. That's, of course, in the last 4 days only. There's been 55, whereas for the full month of October, there were 990. New listings in the last 4 days, 77, as opposed to for the full month, 1,162. And currently we are sitting at 1,129 active listings. We are going closer and closer. We were at closer to 1,200, I think, in our last report. Now we're at 1,129. The number just keeps getting less and less compared to 2,122 last year, which was very low even then. So we are scraping the bottom of the barrel for having anything to sell.
What? Sorry, can I ask a question? Why is that? What's the reason for not getting the more listings?
I think it's the honestly, it's a bit of the tail wagging the dog right now because if people don't have a place to go, they're not putting the house on the market.
So
There's a
it's
really low
fear-driven?
rental market. Yeah, it's fear driven. Yeah, it's COVID. There's a cohort of people, I would say, who don't want to list because they don't want people tramping through their homes due to COVID or be moving during COVID. There's also the folks who are just really know that there's not anything that they can buy out there if they get their home sold. And I mean, that's a real problem that I am dealing with daily with my clients. You know, those people who are selling, we are now struggling to find places. And as property prices go up, the difference between what they've sold for and what they're buying for also increases. And it's almost impossible to make an offer subject to sale where you would actually make your offer before selling your home and have it accepted and get to the end. So I'd say that's why. It's kind of a self-fulfilling thing now that we've reached really low inventory.
Yeah. Okay, so let's just look at what's been going on the last 7 days. So we have 185 new listings, 181 pending. So you can see list to sales nearly 1-to-1. And this has been the case over the past few weeks. Price decreases at 30. So these are homes that aren't selling that need a price adjustment. And then houses that have then completed, and this happens at the end of the month often, or I find the 15th, 449 houses that have sold. So they've actually transferred from buyer to seller. So we're going to just, let's just do this quickly. Total active listings, as Andrew was saying, we are low.
Yeah. Extremely low.
So
Yeah.
2 years ago, when it was kind of quote normal, we were at 2,800 and now we're at less than 1,200.
Yeah. Yeah. Almost
Wow.
at 1,100. I mean, round figures, that's almost not quite a third or
Yeah.
a little more than a third of what we had in kind of a more regular market, you might say, pre-COVID.
Yes, I would agree. When Andrew and I got into real estate in 2006, the market was hot with 3,400 listings.
Mhm.
So I went to look at the total number of listings and the total sales. And what's interesting is I overlaid the peak and the bumps in the sales to active listing ratio.
Mhm.
And you can see that the top peak is not always where there's the top number of listings, but it's where the ratio is the lowest. So that's when the market bumps up. Highest.
So we peaked for sales to active listings ratio March 2021. So there were more, even though there were more, not quite as many listings coming on market as in April, there were actually more of those listings selling. Yeah.
Yeah.
And these are almost two separate graphs because they kind of tend to lag behind one another. If you look at and think about, let's say, look at December 2020, there's more sales than listings because there's more buyers than sellers, but people don't tend to want to put their properties on market in December. So we see a really small number generally every December. You see that in December 2019 as well. But you know, as we ramp up into the spring, you tend to see more inventory and you see more buyers buying that inventory, but the inventory keeps going up while the buyers maybe start to slow down a bit or just not. Anyway, they tend to they don't follow the same pattern. It's kind of interesting to watch both patterns. And then there's the ratio between them that Jane's alluding to. And I'll shut up now.
So quick question. The bump is kind of leading into more balanced market. Is that what you're saying?
No, the bump is where we've just had a bump over the last few weeks, and where the market seemed in August to slow down a little bit for me anyway.
Mhm.
And then in September, sorry, the markets, I'm really tired today. The market picked up in August. It
You were out
slowed
late
down
at
a
that
bit.
hockey game on Saturday night.
Burning the candle, Jane.
Okay, the market picked up a bit in August. So that's a bump. So what that means is in terms of the list to sale ratio here, you could see we went up.
Okay, that's more clear, this graphic here.
Yes. Okay.
Yeah.
The reason why I wanted to show this is because generally people are looking at the total listings and they think it's a good time to list their house because the market's picking up. But actually your chances, like I tell sellers, if you want to make sure your house sells, have it listed in December. Because look at the list to sale ratio is 1-to-1 at least. So you're more likely to sell your house in December. You're not going to have as many buyers coming around, but they're going to be serious buyers.
Well, there were more sales in December, like over 600, than there were new listings coming on the market. There were, looks like maybe 450 in December 2020. I do find though, I mean, generally, I beg to differ with you a bit, Jane, because there's often, if the market's going up a bump, we saw almost a 20% bump in price between end of year last year and the new spring market. And a lot of people do choose to wait till the spring market, but then the challenge with that is it's far enough into the future. We don't know what legislative changes are going to happen. Jen referred to some mortgage rate changes. So as time moves further from our present moment, it gets harder to predict where things are going to go.
And speaking of which, here is that bump that you were talking about. So in January, the prices went up significantly and we moved quite definitively over $1 million.
Yeah. And that doesn't happen every year. That's not a given, but we do tend to see a bump in the spring market if it's a normal market.
Well, and also I think that we tend to hover and where people are like pushing a price and then we bump up and now we're at our new price.
Yeah. Yeah. It's that whole idea of, you know, when you're cooking a turtle. Horrible. So I had okay, I have to explain this, but back in the day, I had a French class and they wanted us to translate a recipe into French. And I hated my French class and I chose a recipe that I thought was absolutely disgusting. It was how to cook a turtle. But the thing is, to cook a turtle, you put it in the water alive and it's swimming around, and you don't put it in boiling water. You put it in the water and they turn up the heat, and then the water, I know it's horrible. And then it doesn't even realize it's boiling, but it just boils itself. So you don't throw it in boiling water and it tries to get out. And anyway, the point is, we're all living in boiling water. No, we're all living in water that's not boiling and the heat is on and we don't notice the heat coming up.
Is it upside down or right side up?
Yeah, I
Because
don't
if the
know.
shell's upside down.
I don't remember how you're supposed to put the turtle in the water.
It's swimming around, so it's right side up.
Oh, okay, good.
Could be doing a backstroke, but yes.
Oh my God, this is so weird.
But no, but we are, I mean, in the market, we all sort of are in the market we're in, and we don't notice the water is heating up around us or not. I mean, we see that the thing's changing, but when there's a new reality, we get used to it. And that's the temperature that we're used to. And
yeah.
Normalized. And that was a horrible analogy, and I'm sorry.
I would agree. But what happens is especially when you're working with clients who are from away, and then they're watching the market and they're like going, holy crap. Like I had clients last year coming to look at townhouses. I think I sent them to you, Jen, for an approval. And then now all of a sudden I said to them, you really need to invest now because I think the market's going up, and they're very conservative buyers. And they're like, well, we'll just wait. And sure enough, now they can't afford to buy a home.
Yeah. And it's really sad because, agents can get a reputation for being, pushy or trying to push people into sales when we're just really more in tune with the market and what's happening. And we can say, I really do believe that the market's going to be going up. And if you don't buy now, you're not going to have a chance to buy in the future. And 90% of the time, we're right. And sometimes people bank on that 10% of the time or 5% of the time when maybe there's a peak and the market goes down a little bit. But overall, we're trying to give the best advice we can. And I have seen so many people knocked out of the market. They want to come here. They've got $1 million even. I just dealt with some folks some months ago. They came here. They wanted to buy a place. We looked around the North Saanich area. We found a few homes that they could afford, but they just weren't quite the right home for them, and which is fine. But now, we've gone beyond what they can afford, and there's just not going to be any selection. And that's the case for a lot of buyers. It's so sad, frustrating.
So real estate is like turtle soup. That's all you need to know.
Yeah, that's the takeaway
Right
today.
side up swimming.
Yeah, yeah.
Okay,
And if
but
you
we
want the
are,
recipe, you can email me at info@andrewplank.com.
but we are, what he's saying though, is we are seeing a significant increase, and we are now over $1 million. And so the shift has happened, folks, and we're going to be staying here. I don't see it moving.
If you
Okay,
look
let's
at-
look at condos.
Sorry, go back one, Jane, just really quick, if you don't mind. Thanks. So if you look at our full year here, we can see there's been a price from January 2021, from that bump in December, there's been a pretty steady market. It's been slowly going up, and we've been experiencing that. Prices have been going up over time. And now we are in September. I suspect we're going to see this graph continue through to December. Then we're going to see that little dip again, and then the bump. And just like we saw from 2020, I think we're going to see that same bump.
On the
What
mortgage
price?
side of things.
I
oh,
think in
sorry.
prices, I think we're going to see another bump in prices. Not as dramatic, I think, but I think we're going to see a bump in prices and then perhaps a plateau in the spring.
Hmm.
That's my prediction. What do you guys think?
I don't know, Jen, tell us what's happening
Well,
with,
What I was going to mention with the mortgage side of things, the key thing, especially in the greater Victoria area, when you get to that price point above $1 million, you have to have a 20% down payment, because you cannot get CMHC insurance or mortgage default insurance above $1 million. So it'll be interesting to see if the federal government are going to make some of these changes to, bump that up, perhaps. Because it's definitely challenging for people, first-time home buyers, number one, to afford a purchase price above $1 million, but number two, to have that 20% down payment.
so
Right.
actually, that's a good point, because what that means is it's going to affect other markets that are in a different price range. So let's look at condos and townhomes, because they're not going to be generally above $1 million. Let's see how they fared over. So since December 2020, when houses average price was over $1 million, condos have gone up too. So we have gone from 450 2 years ago to now 600,000.
25%. Well, actually, that's 38%
Wow.
rise from 450. So that's an extra third up.
Yeah, and condos really, I think, took a hit. And I remember looking with a client in December 2020, and we were looking at condos at 450 and under, 1+ bedrooms.
Mhm.
And we had our choice. We were looking, I would say, at around probably like 20 downtown condos. And then in January, they were all sold.
Mhm.
And I had a client this year list a similar condo with no view. So the condos we were looking at in December had a view. The condo I listed on Johnston had a view of a brick wall, and it sold right away, 450. It also allowed 2 dogs. So
Yeah, the 2 dogs is a big one. It's hard to find condos that are going to allow that. That's for sure. But the condo market is it's so related to the rental market. When it's a tight rental market, people looking for a rental realize, well, maybe I should just buy. So to kind of, Jane, do you remember when we first got in the market and how the 90s condos, the leaky condo era and all that was really kind of in full effect, and it was, remediated versus unremediated condos. And I find the condo market is so it's more prone to the effect of legislation. Like we've had the advent of the depreciation reports, which has changed things. It's sort of moved the needle a little bit for, condos that have been on top of their maintenance versus not. There's been the issue with insurance in the last couple of years as well. What do you guys? Yeah.
water's also been an issue. I found the pipes, depending on what pipes they've put in the building, affects the insurance for the whole building. So like I've seen a building on View Street that had $100,000 deductible if you had a water damage.
Yeah. No, I've seen the same. Yeah, I think the Juliet, maybe it has a pretty high one. And in the past, I was always suggesting a steel and concrete building over a frame building for the fact that I feel like, they're more solid and larger number of units, so generally better decision making or what have you. And now with insurance rates skyrocketing, the insurers are really concerned about these high rises where you get a flood on the top floor and it trickles down, 10 floors,
Literally.
a lot of damage. So it's a constantly changing picture. It's really interesting.
Jen, does it affect lending? So we're talking about people buying over $1 million, under $1 million. What about in a condo that is, I know we had a client where they didn't have any, they were a self-managed building.
Yes.
And so that really affected the lender too, right?
Yeah, self-managed. If they're sometimes, quite often with the self-managed ones, I shouldn't say quite often, but with the self-managed ones, they may not be as educated around the depreciation report. So then when they, opt out of the depreciation report, it definitely raises flags for lenders, and getting that default insurance is where it can be a challenge.
Yeah.
So I've had clients sell in a self-managed building and they had a depreciation report. And I'm looking at the numbers and I'm thinking, the numbers don't match up. What was going on in the building was really and they weren't following the depreciation report. They just kind of had it. They
Right.
spent $5,000 on this
They did their
thing.
part.
Yeah. Check. Depreciation
Yeah.
report done. Yeah. The point of the depreciation report is to tell you, give you that whole, honey-do list for the condo. Like, what do we have to do here to keep it maintained and up to date? But yeah, Jen, I had a question for you going back a sec. There is this talk that the government had been talking about raising the rate, the cap for CMHC to 1.25 million.
Mhm.
And I recall a couple of years ago, some news or something about, CMHC has a mandate to only lend, I guess, so much money, or they only have so much money that they can lend. So raising this rate means that they're going to open up to a lot more lenders. At what point do they cap out on how much they can actually lend in their exposure and portfolio?
They don't lend, they insure, right?
Oh, sorry,
Yes.
they insure, but they're insuring quite a large, like if there was a downturn in the market, their
Yeah.
exposure is huge.
They do have, and I don't know what, I would have to look up. I could get the information, but yes,
Mhm.
they do have caps per se, because what I notice, like if they're, let's just say it's been really, really hot and they've insured a ton of properties, all of a sudden those kind of, 50-50 properties that, or 50-50 applications, they'll find a reason to decline it, that you would have got a file approved 2 months prior to that with the same situation. But for example, a client's on probation with their job, but their credit score is over 800. We'll get that application declined when previously it would have been approved.
Interesting.
Oh,
Okay.
interesting.
So there are some subtleties behind all of this. And I guess the point is one change is going to definitely impact other areas.
The other thought, or the other, what's been mentioned with federal government is, and CMHC is they may change or reduce the premiums up to 25%, which would be interesting because the amount that the premiums have increased over the last few years has been substantial.
Because the lending has, the price of the lending has increased.
Yes, yeah. So then they've increased the premiums, but it's affected the affordability for clients because that premium then, so yeah, it'll be interesting to see if they do decrease the CMHC default insurance premiums.
How is the premium calculated?
It's based on the purchase price and the down payment. So
Right.
it's more based on the down payment, but there's an extra calculation above 500,000. So if you have a 5% down payment, your premium is calculated based on having a 5% down. I'm not going to explain this very good because it's Monday morning here, but above 500,000, yes, I'm with you, Jane. above 500,000, you do have to have a minimum of 10% down above 500,000.
Okay.
Wow.
Is there anybody doing 0% down?
No.
Okay. I had somebody tell me that the other day. I'm like, I don't think so. I
No.
think you need to go and talk to a lender. And when they said, oh, well, they'll give me 0% down, I said, what are the terms of that
Yeah.
lending?
How the heck
Like,
does that work?
Yeah, that's just not a good idea.
first child and
Now, there is a program called, the national website is called A Place to Call Home, and the federal government will match your down payment. You put 5% down, they'll match it with 5%, but they are also now owning 5% of your home.
yeah, it's called a reverse bond.
Yes, yes.
You are being bonded.
I like that
Okay.
analogy, actually. I will, if it's okay, I will use that. That's a
Yeah.
good one.
Rather
Nice
than
one.
you investing in government, the government's investing in you in real estate.
Isn't that nice?
Brilliant.
Yeah. I mean, I've heard there's limited application for where that actually is useful to people, but I guess there is every once in a while an argument for using that program. But most people aren't taking them up on it, are they?
No, I've done one application for it. There's so many restrictions that there's not many people in the greater Victoria area that it
Right.
works for.
Right, that it actually works for, qualifies for.
Yeah.
Now, you said that
Okay.
the CMHC, sorry, you said CMHC fees have gone up in the last couple of years, but is that only because the market's gone up, or did they actually change their rates themselves?
They changed the premiums.
Oh, okay, yeah.
Yeah.
And now the government's looking at clawing that back.
Well,
Yeah.
we'll see.
Yeah.
Yes.
we shall see. Okay.
Okay, let's get to townhouses. So townhouses did really well after COVID.
Mhm.
And they have consistently risen. And I'm thinking actually what you were saying, because of the price of houses now going over $1 million, and just looking at what affordability is, if we look at houses in December 2020 stayed consistent. Condos went up, and so did townhomes. Townhomes allow you to, not share as much space as a condo, and give you some privacy. So to me, it totally makes sense that this market
You
is going
can,
up.
yeah, townhouses kind of were that sort of no man's land between somebody who's needing a condo kind of lifestyle and somebody who wants their own house with yard, and townhouses often have some yard but limited, and then you're paying generally a higher strata fee. But when you're looking for an actual home for a family of 3 or 4, and you can't afford a house because they're averaging over $1 million, and they're all the ones that are affordable are not in great shape, there are some great alternatives if you choose a townhouse. And it's been kind of now coming onto the radar, which is I think why we're seeing these prices come up. People who hadn't considered them before, they now have to consider them, or they're being more actively promoted or suggested to their clients. Like, we're educating our clients around the value of a townhouse.
Also, you can live in a great area in a townhome. And like I was just talking to a client this morning who bought in the rail yards, and you're like 5 minutes away from downtown. You have parking, you can walk, you can ride your bike anywhere, you get right on the water. Like, why not?
Yeah.
I should
Yard
move down there.
maintenance. Yeah.
And those are going for 800,000. So.
Right. So if somebody who's listening to us from Smithers is going to say like, what? But from a Victoria perspective, we can say, that, wow, that's actually a really great lifestyle, and they get a lot of room, and it's way better value than a condo, and really quite equivalent. It's a nice downtown living style.
Yeah. Okay. So we're, Andrew asked for some graphics, and my office is doing those graphics. So here we go.
Thank you.
Okay, comparing year over year. So I'll do the first one, you can do the next one. So single family homes, average sale price $1,169,000, up over $984,742 last year.
Mhm.
260 units sold this year. This is down from 422 last year. We talked about how high the inventory was last year compared to this year. And then the days to sell, this is telling you it's a hot market at 22 compared to 30 last year. And I thought 30 was hot.
Yeah,
Okay.
on average days to sell. And, you know, we see properties sell in a day and we see properties sell in 3 months, but on average, this is stellar fast. So now we're talking about condos, apartments. And so September 2021, average sales price was 590,706. This is Greater Victoria, Jane?
Yes.
Okay. And then, so that's that's up from last year at 502,169. So almost, yeah, a $90,000 jump. Almost 100,000. In terms of units sold, it's up a bit, not dramatically. 280 units sold in September 2020 versus 306 this last September. Days to sell has gone down really dramatically from 42 days to sell to 23. So we're comparable to the houses in terms of the speed of sale now.
And I think part of this is due to the UVic overcommitment of 750 places and people deciding to buy their kids condos.
That was wild. My daughter being in second year university and some of her friends coming from out of town trying to find a place to live. That was pretty challenging.
Yeah.
Lovely.
And many people buying homes. So the market up in Gordon Head has gone crazy because it's near UVic, and now the people can buy a house for their kids and their friends can pay their mortgage.
Yeah, I'm working with some buyers right now in Gordon Head, and it is, frankly, it's heartbreaking trying to find anything for these folks who have lived in Gordon Head pretty much all their lives, finally wanting to buy their own home. And it's, you know, we're having some trouble, and we're looking further afield. We went as far as Royal Oak to look at a place, and they were going to write an offer. I said, don't even bother, because it ended up getting 32 offers.
What street was that on?
On Viewmont.
Oh yeah, I saw that.
Yeah. So anyway, good times.
Okay.
Next.
So I'm going to talk about townhomes here. Sale price has gone up to 764,000 from 601. So holy smoky, the $150,000 increase. Minimum units sold down 78 from 107 last year, and days to sell also lower at 18 compared to 32. So we are rocking it in townhomes.
Those are hot. Yeah.
Ooh. Okay. Waterfront.
This is interesting that the average sale price has gone down for Victoria Waterfront. And they're saying residential, so they're just talking about houses. Yeah, this seems odd to me because I'm seeing some real luxury homes selling, higher end homes selling, but I guess on average, maybe there's more coming up and some that aren't as valuable. We see some properties coming up more maybe in Souk or Chosen or what have you, because this fact that this number is down is frankly really surprising. But we don't have a lot of sales probably in September 2020. There might have only been 2 or 3 sales for every month. So when our average sale price can really skew from month to month. That being said, well, yes, only 12 units sold in September 2021 versus 42 in September 2020. People were picking up those waterfronts back then, but 27 days to sell now versus 140 from September 2020.
Also, I just want to say, like, if it's up at over 2 million and its average is 140, probably the higher price in that averages was bringing it up. You know what I'm saying?
Mm-hmm.
Like maybe there was a $16 million house or something last year.
Yeah. Yeah.
Okay. So this is the home price index. This is kind of the ideal home in each area. And we're looking at the regional summary. So in the core region, so that's downtown, September 2020, we were at 879 and now we're at 1.1 million. So we have up 25%. Do you want to do Peninsula?
Sure. So in September 2020, we were at 869,300, and in September 2021, we're at 1,088,000. 1,600 again, and almost exactly the same, a change of 25.2%. Not a bad return on investment if you were putting down 10% on a property, and back in September 2020, you would have made quite a nice bump in your value. Why don't we have Jen do one of these? This is fun.
Okay, do the West Shore, Jen, since you live out there.
Yeah, so the West Shore, September 2020, we're looking at 690,900. And in the 2021, 876,100. So 26.8% change.
Amazing.
Yeah. And over the whole area, so the average price for home went from $802,600 to $1,013,900, an increase of 26.3%. So overall, we're looking at an up market.
Mm-hmm. We are. When does it end? When does it end, folks? When do we get off this ride?
Isn't it interesting, or historically, isn't it the condo market is kind of the last market to change, which those stats really solidified that.
Yeah.
Mm-hmm. Yeah.
It's kind of, I always think of it as kind of like a flame. So when the market starts getting hot, lower, and that it pushes things up, and then you'll see it cooling down up, and then same thing geographically, it'll go from the core out. So, and I'm seeing a lot of really nice properties coming up in Souk and in the outlying areas. Like I'm looking as far sometimes with clients to Duncan.
Yeah. And I agree. It's like I use the analogy of concentric rings, where you've got the central ring of Victoria, and or the chocolate fountain, where the fountain is flowing up in Victoria the most, and then it starts to spill over into the outlying area, and then it spills out into an overlying area. But when the fountain turns off, those outlying areas are the first to kind of concentrate back.
And the chocolate starts to flow down
into
and
the
covers
turtle.
over the turtle. But does the turtle like chocolate?
I used to love those little turtles with the caramel.
Oh, turtles! There we go. Throw in a couple pecans.
Yeah, perfect. We've lost Jane again.
Well, I'm glad I wore my plaid because it's red.
Jane changed when she saw I was wearing plaid.
I did.
Looks good.
Yeah.
I wanted to be a team player.
Yeah. Thank you.
So, Jen, what's your prediction? What's happening? Let's summarize everything.
From the interest rate side, we're looking at a slight bump. What's so funny? Is that a turtle behind you?
Cats are fighting.
Oh,
I'm going to go mute.
We're looking at, there's potentially going to be an increase in fixed rates up to a 0.25%. On the variable rate side, we don't see any changes. I continue to recommend really having a open look or an open eyes with looking at a variable rate mortgage and seeing if that's going to work with your financial plan.
Okay. And Andrew, what do you think is going to happen?
Okay, now I have to unmute, and you're going to hear the cats fighting in the background, perhaps. They're still getting used to each other. What do I think is going to happen with mortgage rates?
No, with the market.
I do, like I said, I think we're, what I've noticed is as markets tend to sort of, things are starting to feel a little bit jangly. I'm finding things sort of separating in terms of like some properties are selling way above asking price. There's some, I think we're kind of moving towards a bit of a moderated market where in the spring, we're going to see more selection. We're going to see prices kind of hold for a bit. I just don't think what we're currently seeing is sustainable, unless, as Jen alluded to, we see an increase in the CMHC, rate like ceiling, where maybe leaves a little more room for folks. But it feels to me like the stretch is as wide as it can go. The tension is as tight as it can go. I'm not sure where the money is coming from that could support an increase, pushing more flame into the fire. So I feel like we're kind of reaching hopefully a point of equilibrium and maybe a balance into 2020. I think we will see a slight 2022, that is, I've lost a year or two. But I think we'll see a bit of a bump in price, but nothing really dramatic like we saw last year, but we'll still see a bump between December and the new year. Jane, what do you think?
I think, so I look at real estate slightly differently, which is why we do the show together. That if you have two people with a really great down payment and a good job and they can't afford a house, I think we're going to see an adjustment. I think, yes, there's a lot of activity on houses right now. And I think anybody who thinks they want to cash out, maybe they want to move from a house into a townhome or a condo. And I do have clients like that, that they will start selling their homes and we'll see more inventory. I generally find price increases and then inventory. And those people are a bit late to the game. So I suggest they might want to list now compared to in the spring if they're okay with renting for a bit, because the inventory right now is so low.
And that's the challenge, Jane, is that there's nothing to rent. And I was talking to some folks yesterday about listing their townhouse for sale, and that one's there won't be any problem with trying to find something else afterwards. It's just being sold. But they were reporting, because they work in the education sector, that a lot of folks have been coming in, like the schools are inundated with new students, that there's a lot of people coming in.
Oh.
You hear that?
Ow!
Here, let me show you what we've got here.
Oh.
The standoff.
Yeah. So they're still getting to know each other, and they, Callie, the gray one, will jump at Shadow, and then Shadow says, "No, I'm not having any of that." And then they
Deciding who's boss.
Heated discussions. Yeah.
Yeah.
Anyway, point is, we were talking, there's a lot of students coming in, there's a lot of families coming in, people are still coming here from Victoria, and people still continue to have more people. So, the population's going up.
Yeah.
So I agree with you, Jane. And at some point, there's always an adjustment. And it's really dangerous and hard to make a prediction about the future. And most people who ask me this, I actually have to say, really, we don't know. We have to say we don't know. Anything could happen. But
so there are more rentals coming up on the West Shore. They're being built right now. I think that's what's going to absorb the population a bit. Definitely, like I've heard in the past, in terms of even the economy, the thing that's stifling the economy building here is housing. It's not jobs. So I don't know. We'll see. I mean, I do have clients right now who are looking, and it's sad because generally I'm pretty good at winning multiple offers, but we're being blown out of the water right now.
Yeah. You can only win a multiple offer if your client has, the money and the wherewithal and to make the best offer. And when the numbers just are just coming so far from the asking price, it's really difficult to make an offer that's compelling. Even and referential offers or contingency offers are unpopular in this market, and it can be confusing. So it's a fine line. It's a lot of communication and trying to make yourself stick out from the crowd in those offers. But a nice video or a letter or even an unconditional offer doesn't set you apart anymore. One of my colleagues at my recent networking meeting just was talking about one property that they had offered on. That property received, I think, 13 unconditional offers. Every offer was unconditional.
Okay, was that yesterday?
No, it was a few days ago, because my networking meeting was Friday.
Okay.
Unless they have a time machine or can tell the future. But no, these things are happening more and more. And Jen is shaking her head, because I know you're advising people, and it's a dangerous time to be doing that.
It's really difficult. There's so many risks, obviously, in going unconditional from the lender standpoint. There was recently a situation in our office, another broker dealt with, that there was an assignment of a contract, and it was for an existing property, not a brand new build. Their client was looking to buy it, had an accepted offer with a financing condition, thankfully, because she couldn't get financing set up for it. Unfortunately, the next people that went in and bought it unconditionally, thinking they were getting a great deal, ended up having to get private financing due to this assignment of the contract issue. So
Also, when you're buying unconditionally, especially if it's a house, there may be issues regarding insurance that you have to fulfill in order to get the financing, and sometimes the seller won't let you in.
Right.
So
Yeah.
anyway, that's a topic for another discussion.
Yes.
All right. So thank you, Jen, for joining us today. How do people get in touch with you?
You can reach me at 250-217-4925. My email address is j.lowe, which is LOWE, at dominionlending.ca. I work for DLC Modern Mortgage Group.
Okay, and Andrew.
Thanks very much, Jen, for everything. You can reach me at info@andrewplank.com. So that's just my name, info@andrewplank.com. Or call me at 250-360-6106. Happy to chat anytime. All these things we talked about today, there's usually specific things relevant to yourself. So call Jane or I, or if you have specific questions about mortgages, give Jen a call. Jane,
Or
how
you
do
can
we
call,
reach you? Sorry?
you can call Jane or me.
Thank you, ELT teacher.
Hey everybody, my name is Jane Johnston. I'm with the Briar Hill Group at Remax Camosun, and you can check me out on my website at briarhillgroup.com. Or if you want to check out neighborhoods or these videos, you can go to vancouverislandtime.com. You can always call or text me at 250-744-0775, and my email is briarhillgroup@gmail.com. All right, everybody, take care and have an awesome day.
Have a great week, you guys.
Thanks, Jane. Thanks, Andrew.